Hello and welcome back. I'm attorney Andrew Bethel of Bethel Law, where I actually teach you how to grow your estate and create generational wealth. Today, we're going to discuss some significant potential changes to the U.S. tax laws that could come into play if President Trump wins the 2024 election. These changes are a part of Project 2025, a comprehensive policy blueprint developed by the Heritage Foundation. We'll focus on the proposed changes to income tax brackets, estate taxes, and gift taxes today. Now, before you get out the torches and pitchforks, we're not delving into politics here. Beyond the facts at hand and what we see in the proposal. I know there's a lot of opinions all about Project 2025, and that Trump has recently come out and said he's never heard of it. However, policy proposals often stem from more than just one man in one office. There are a lot of cooks in the kitchen when it comes to running these political parties and the policies they choose to focus on. I'm here to inform, you make your decisions from there. With that disclaimer out of the way, let's get down to the numbers. Hit the like button, subscribe, share the video with mom and dad, and let's dive in. Firstly, let's briefly cover what Project 2025 is. This is a 900-page mandate from the Heritage Foundation designed to guide the next conservative administration in overhauling various aspects of federal governance, including the tax system. While President Trump has distanced himself from the plan, many of its proposals align with his previous tax policies. One of the most significant proposals in Project 2025 is a complete overhaul of the current federal income tax system. Currently, there are 7 tax brackets: 10, 12, 22, 24, 32, 35, and 37%. These brackets are designed to be progressive, meaning that the higher income earners pay a higher percentage of their income in taxes. Project 2025 proposes reducing these 7 brackets to just 2, 15 and 30%. The 15% rate would apply to individuals earning up to approximately $168,000, while the 30% rate would apply to income above that level. Additionally, the plan calls for eliminating most deductions, credits, and exclusions. This could simplify the tax code, but it might also increase the tax burden on middle-income families. For instance, under the current system, a married couple earning $100,000 would pay lower taxes due to the 10 and 12% brackets. Moving to a flat 15% tax rate could increase their tax liability by about $2,600. That increase could spike dramatically if the same couple had children but no longer could benefit from the child tax credit if it were also eliminated. By comparison, let's say we have a married couple with 2 children and earnings of $5 million a year. They would likely enjoy a $325,000 tax cut under this simplified system with only the 2 brackets. In essence, it seems as though the more money you earn, the more you start to benefit from the 2 bracket system. However, to get there, you'll likely need to earn more than $168,000 per year, which is more than double the household median income of approximately $75,000 a year. Again, who knows what any overhauls to the tax system would look like in practice once it filters through the media, lawmakers, and finally the president. Next, let's talk about estate taxes, which can have a profound impact on how wealth is transferred across generations. As of now, the current estate tax exemption is set at $13.62 million per individual thanks to the 2017 Tax Cuts and Jobs Act, the TCJA. This exemption level is set to expire at the end of 2025, potentially reverting to the pre-TCJA level of $5.5 million, adjusting for inflation, which would mean the level may be around $7 million at that point. The mandate proposes making the current higher exemption permanent, as in keeping the tax rate set by the TCJA and reducing the estate tax rate to no more than 20%. This means that if these changes are enacted, fewer estates would be subject to the estate tax, and those that were would face a lower tax rate. Now, of course, for higher net worth individuals, this is a significant benefit. Keeping the higher exemption and lowering the tax rate would reduce the tax burden on estates, allowing more wealth to be passed on to heirs without being diminished by taxes. Gift taxes are closely related to estate taxes and are another area where Project 2025 proposes some changes. The lifetime gift tax exemption is currently aligned with the estate tax exemption at $13.62 million. Gifts above this amount are taxed at rates up to, wouldn't you know it, 40%. Similar to the estate tax proposal, Project 2025 suggests reducing the gift tax rate to no higher than 20% and making the current exemption levels permanent. Again, basically just keeping the TCJA provisions in place. Lowering the gift tax rate and maintaining the higher exemption would allow individuals to transfer more wealth during their lifetime without incurring significant tax penalties. This can be a crucial strategy for estate planning as it allows for wealth distribution while potentially avoiding the higher estate tax rates. There are many reasons why one would want to be able to maximize how much they can gift to others without Uncle Sam taking a slice, for long-term care planning, asset protection, and preservation. For example, did you know that if you had an irrevocable life insurance trust, the benefits received from that life insurance policy are separate from your estate and insulated not only from your creditors, but that of your beneficiaries as well? However, each payment of that insurance premium is considered a gift for tax purposes. You'll have to subscribe to catch our upcoming video all on ILITs, irrevocable life insurance trusts. Back to the taxes at hand, however, it's important to note that many of the provisions of the 2017 TCJA are set to expire at the end of 2025, including the increased estate and gift tax exemptions. If Congress does not act to extend these provisions, we would see a revision to the previous lower exemption levels, which means a greater likelihood of you or your estate being taxed. To bring this tiny sliver of Project 2025 together, the proposed changes could significantly impact how we handle income, estate, and gift taxes in the U.S. Simplifying the income tax brackets to 2 rates might make filing taxes easier, but could also increase the tax burden on middle-income families. Additionally, reducing the estate and gift tax rates while maintaining higher exemptions would benefit high net worth individuals by allowing more wealth to be passed on to their heirs with fewer tax implications. Most of us already benefit from these exemption levels being so high that even if they were to drop down, most folks would still be exempt from the estate or gift taxes anyway though. However, what do you think about these proposed changes? Do you think you can benefit from these changes, or does it only impact those at the top? Let me know in the comments below. Thank you for watching. Don't forget to like, subscribe, and share the video with that family member who's probably into politics a little bit too much. I'm attorney Andrew Bethel, and I'll see you at our next meeting.